Welcome to Java. Thank you kindly for joining me. It's February 28th, 2025, and it is also Friday. Quite a bit has gone on since I was here last. I've been out the past couple of days and still have a few challenges, a little bit of more chaos to go through and some setups. However, I wanted to get this out. There have been some, as you probably know, massive changes that have been going on. So let's get started with what's hitting the market at the moment. We've got the MMRI is at 284 at the moment, dropping. We've got extreme fear in the market, the fear greed meter, all the way down below 20. It's at 19 this morning. And we've got, of course, cryptocurrency being hit. It's actually back above 80,000 for the moment. It did touch the 79,000 level, and with it drags all of the rest. Now we've got the 10-year yield is pulling back a bit. Now that is a little interesting because it's going to give a little room for the markets, but the relative strength of the dollar is still strong, and that tends to kind of crush markets. So we've got a little bit of opposite work here, and I think that's what's held the MMRI has dropped a couple of days ago, and we'll talk a little bit more about why. But at the moment, it's significantly down. It's been getting hit. This is kind of a reverse Trump trade from the moment that he got into office. Everyone got optimistic and threw their money into the market. And this is just kind of a pullback and a neutralizing of that and a slight reversal. However, looking at futures, it looks like it's going to strengthen up just a bit. Now, the other interesting parts is that precious metals have also been hit. So, gold below 2,900 at the moment, and silver back below 32, although not that much, so not that big of a deal. Oil is holding just below 70, and that is a lot on pretty much the war front quieting down, at least for the moment. So, with all of these factors, really what we're looking at is this 10-year yield dropping. There is massive amounts of money going into the debt bond market, and that is a fear trade. It's a fear trade, and it also appears to be a little bit more of that. But what we've got is that China is vowing all necessary measures against the new United States tariffs. Now, again, down here, daily driver is fear, and it is weighing on tech and also Asian markets. They dropped on this as well. European markets looking very weak. So, kind of across the board, because all of this secondary war, tariff war, economic war. Um, Today, we've also got 4.7 billion in Bitcoin options expiring. So, more volatility. We've got our levels have been saying for some time. There is still that gap fill. If it hits 74, 75, it may not. It may not get that low. But we've got some other factors coming in here now. On the calendar, they're all expected prior to open for the most part. We're getting the PCE, which is the gauge that the Fed looks at as to lowering rates. So, with the 10-year yield dropping on its own, they're going to make announcements about them bringing the rates down as well. So, we're getting more wholesale inventory numbers, and then the PMI not long after the markets open. So, what this is all heading towards again is the same thing. We've got officials sounding the alarm for a potential food shortage, and they're saying it's a special concern. Well, they've had a lot of things come out recently between where they're affecting not just the beef industry and the egg industry, but now the grain. They're saying that a good portion of that is because of the intense heat, creating issues for the season. So we're going to see more shortages. And what does this do when there's less? It creates price spikes. So we're going to watch food prices go up. I know nobody in here is shocked. And if you're new, hopefully you're not shocked either, but stick around, we'll explain why. So they're saying there is a jobless claims spike. Also, no shock, saying it's a worrisome sign for the US labor market. United States labor market has been crashing slowly for some time now, we are getting constant stories of mass layoffs from major companies, including Stellantis, all of the strikes that are happening. So I don't know where they're saying that this is kind of new or a spike. Might be a spike from what's been going on, because there's going to be more. It's going to continue. So they're saying jobless claims by U.S. federal workers also surging. Well, that's no surprise, but that also doesn't hit the economy as much as job loss from private sector. And there's a few reasons for that. Now, we've got the Fed's right hand might be forced to lower rates. Couldn't see that coming. As they said, they want to lower rates. They've been saying they're fighting it, fighting inflation, and talking the talk. However, they're on board along with Trump. Must lower rates, easy money. They took the punch bowl away too quickly. They're watching little forced devastation here and pull back within that market. Now, this is kind of the bottom of it all of what has happened the past couple of days, at least the surface for the retailers. And this is that Trump is threatening to double the tariffs on China and says they're punishing Mexico and Canada, and that both tariff effects will go into effect March 4th. So this shook up the market quite a bit. Probably going to continue for at least through opening this morning, and we'll see how the numbers come in for the inflation. Now we had Keir come over and visit from the UK, and they are talking about kind of dividing up Ukraine's resources and also making other deals, but there's a lot of tension here. We'll see where that goes. A couple of other things I want to go over. First, Elon Musk saying that an upgrade of the FAA, that's the Federal Aviation Administration's air traffic control system, is failing. There have been quite a few incidents lately, which is undeniably an issue. So he's saying that SpaceX needs to take over Verizon's contract. So let me know what you think about that. I do agree that it definitely needs overhaul. They've been having issues for some time. They've been issuing large scale ground stops because they can't keep up with it. And this was prior to Trump getting in office. This has been happening for the past couple of years at least that I am aware of. So this final quote I'm going to leave you with. I don't think we're going to have a choice. Elon Musk predicts universal income. So universal, hopefully they mean basic income and not entirely universal income, but will eventually be high for the chances of it, but fears people will feel useless. So all along they've been ushering in a universal basic income, which more than feeling useless, it drives out innovation and all of the things that made the United States one of the top producers and just good in general and able to have the dream rather than come here and get universal basic income. So give me your thoughts on that. We've gone hundreds of years without it, so thinking about that coming in now. So with this, I wish you a wonderful trading day. Caution as it could reverse a bit for our bull trap. It looks like it's got a bit of a lot of that pressure has been let out, and it could continue later, but very volatile at the moment, headline driven, pushing more on those tariffs. But if the Fed says they're going to cut rates, PCE comes in different, could reverse violently. So with this, have a wonderful day, and until I see you again, stay free.